Today, Bitcoin soars to close out its best week since August. Crypto scammers try to capitalize on the death of Queen Elizabeth II. And we get a reality check on what the merge really means for Ethereum. Welcome to CNBC's Crypto World. I'm Pippa Stevens. Crypto markets closing out the week with a rally. By noon Eastern, Bitcoin rocketed back above $21,000, Ether reclaimed $1,700, and Solana rose to $35. Bitcoin and ETH are on pace for their best week since August 12th, and with today's gains, total market cap for crypto crossed back above $1 trillion. Now, this latest rally coincides with big gains on Wall Street as well. Investors are shrugging off comments from Fed Chair Jay Powell that more rate hikes are ahead. Crypto's also seeing gains thanks to a weakening U.S. dollar. The dollar index, which measures how the USD stacks up against a basket of other currencies, fell by about 1% this morning. Meanwhile, the euro's value ticked higher after the European Central Bank raised interest rates. A weaker dollar traditionally drives gains in Bitcoin, so if the US dollar continues to fall in value, more of these rallies could be in Bitcoin's future. All right, time for the top stories. First up, Celsius and its creditors just reached an agreement for a government probe. In a pair of court filings, the two sides agreed to let an independent examiner look at Celsius's crypto holdings and storage requirements, along with its tax compliance. The agreement comes after the U.S. Trustee's Office filed a motion to hire an examiner to look into the bankrupt business. Next, a Florida man pled guilty to a $100 million crypto Ponzi scheme. Joshua David Nicholas was head trader for crypto platform Empires X. Nicholas claimed that the platform maximized profit using AI, but really paid earlier investors with money that came from new investors. Empires X also claimed to be properly registered with the SEC, but it wasn't. Nicholas pled guilty to one count of conspiracy to commit securities fraud, which carries up to 5 years in prison. Finally, as the world reacts to the death of Queen Elizabeth II, scammers are trying to cash in. Dex Screener, which tracks crypto prices across decentralized exchanges, shows dozens of listings for tokens capitalizing on the death of the Queen, all with names like Queen Elizabeth Inu, RIP Queen, and London Bridge is down. That's a reference to the official plan set in place by the British government in the wake of her death. Many of these tokens have surged in price in the past 24 hours, but most of these tokens have very little financial backing, putting buyers at risk of pump and dump style crashes. Okay, for our main story of the day, everyone is still awaiting the merge next week. With all the hype around the shift to proof of stake, Crypto World took a look at the real benefits of the merge and some of the misconceptions.
The most important upgrade in crypto's history is here.
So I think this is very important to Ethereum. It is also very important to the industry and also very important to other companies, including Coinbase.
The merge is the culmination of years of work in the Ethereum community, going all the way back to its founding to transition the basic security from proof of work mining to proof of stake mining.
It removes a big source of FUD, or fear, uncertainty, and doubt, kind of takes away fodder from the critics.
Proponents have claimed the merge will change the crypto landscape. It will catapult Ether beyond Bitcoin to be the most widely used cryptocurrency. It will spur development of Web3 services, new NFTs, new investment for the network. But not so fast.
It can be tricky to disentangle what exactly the merge means. So I think just to kind of speak bluntly, the merge will not do anything on its own for Ethereum's throughput. They have other kind of solutions in the work that are trying to address essentially making transactions happen faster and cheaper. The merge itself is not really designed to solve that.
The merge isn't a mythical upgrade to solve all of Ethereum's problems, but it is an important one.
One thing that the merge will do that people are very excited about, investors especially, is that it will reduce the amount of Ethereum ETH that is emitted to the market. So post-merge, there will be less supply hitting the market. So if demand stays constant, that should boost up the price.
Ethereum launched its Beacon chain, a secondary network that operates on proof of stake, back in 2020. The goal was to bring together, or merge, the old proof of work network with that proof of stake network through a series of upgrades.
The proof of stake chain has actually been live for over a year now. It just hasn't been used. So the reason why we call it a merge is we're now combining the existing proof of work blockchain with the ongoing proof of stake one. And if all goes well, then Ethereum's environmental impact will diminish significantly to that of any other arbitrary computer network because we will no longer have mining.
The merge isn't about growing scale or bringing cutting-edge technology that will revolutionize the crypto industry, but it does set the stage for those upgrades to come in the future.
But the key point I want to point out is it will only set the stage for further upgrade in 2023 and 2024. But in terms of immediate benefit, we may not feel that just right after the merge. But for Ethereum, when it migrates away from mining, use less energy, it will kind of have a better or easier conversation with investors. And I think longer term investors would accept Ethereum because of that less energy.
This upgrade also isn't without risks. The likelihood of a failed upgrade or lost data is low, but the network is forking or splitting. There will still be a proof of work version of Ethereum, and some developers who are against the merge could stay on it.
You could make a case that everyone will wake up on the day of the merge and regret it and be like, oh my gosh, this is a terrible decision. Let's all go back to proof of work. So in that case, I guess you could call it the Ethereum community would coalesce around a forked version of Ethereum and kind of leave this new, environmentally friendly version that everyone thought would be the way forward kind of in the dustbin. And that would create a lot of volatility and confusion in the market because that is going against what everyone expects. I think there's a very low likelihood of that, but that's certainly something that could happen in the event of a fork.
But for now, developers are focused on this transition to proof of stake so new technology can be brought online.
Okay, before we go, Sam Bankman-Fried joined Squawk Box this morning after the company took a 30% stake in Anthony Scaramucci's Skybridge Capital. Here's what he said.
Since then, we've had a much more stable period. It's going to be macro driven to some extent going forward, at least for the foreseeable future, as interest rates continue to dominate the conversation more generally around asset pricing. And it could go up, could go down, obviously, but we don't sort of necessarily foresee more pain from here. Things have very much stabilized in the space, and I think similarly, when you look at what we're working on day to day, 4 months ago, what we were looking at some of the most troubled places in the ecosystem and trying to figure out how to handle that. As of now, I think while we're still having some of those conversations, we've transitioned more of our time back to looking at future growth of the ecosystem.
That's all for Crypto World this week, but we are back again on Monday and we'll see you then.